So if it's the range and if it gets broken and the price comes back into the range, most of the time it shows like the weakness, and most probably it will still go to the lower part of the range and probably break to the downside. So this is what I know, like I understand. But if we are talking just about opportunities and how to make money with it, if I was to trade it, I would trade it this way right now, because I have no way to long it here. So either you wait and see what happens, and if the price breaks below of the support here, like of the liquidity zone, the low of the liquidity zone, you can try getting on the retest like it was here. You had a retest. Or you can just short here. How much would you risk? 1-2% to gain around 3, yeah, it's 3-1 with this stop loss size. Of course, it depends on how you will be getting your stop loss. You can play more risky game with a tighter one, but this would be like a safe play. So if you're risking like 2% on a day, on a 4-hour time frame, to gain 7% on your account, I mean, it's worth risk, because there's more bearish signs right now and more signs telling me to short it. And more I look at it, I am more convinced about it. There are more bearish signs than bullish signs. So even if the lower time frame looks like, well, it looks bullish, but it's only a lower time frame. So in a 4-hour time frame, you have 16, 15 minutes dildos. So a lot can happen during this 4-hour dildo forming. So yeah, I can make pros and cons, Faisal, about my narrative about the market, but what I'm making a narrative about, it's the past, okay? It's what already happened, which I can observe, and I can make my opinion about it, and I can talk about it because I see what happened. I don't need to guess it. It just happened. And TA comes from observing the past. So observing the past and knowing that the history tends to repeat itself, you are taking an assumption that similar behaviors of the market will repeat over time. Okay, so from the past you can take key levels which represented a tough support to resistance, which will still be in a, let's say, if somebody is buying and selling an asset, this person will remember for a while what was a good price to buy and a good price to sell. That's why, and there is the market memory, which is incredible, but you can see if you make correct levels, they tend to be respected for a long, long time, okay? And if you make key levels, it is most probable, it is not like it will bounce or it will get rejected. The probabilities here are on the short side, because it's a strong resistance on the way. We came back to the range, which we already broke. We had a distribution here, and we are in the short-term downtrend. So you have to take your bias, which is short. You're back in the range and at the resistance. So the second thing from my checklist. So we are at the resistance. I'm not planning to long. If I want, I will be shorting. And I will be checking. So I'm at the resistance. I'm biased short. And most of the things are showing me that it can be a good opportunity to find an entry here and to ride it to the downside. But if I will be right, I don't know. It can break the range to the upside. Market can do everything, okay? But the probabilities are here on the bearish side. So I have more chances of winning if I play it to the downside, especially at the resistance. I'm talking only about chances. If I get wrecked, I will lose 2%, whatever, it happens. This is what trading is about. It's not like about being sure about everything, like I'm sure it will go down. No, you're just looking at the chart and seeing, okay, what are my chances of it going up and down, and you're making scenarios, you're making plans for the situation. So when the price is in key area like this, you will be making a scenario for it breaking it to the upside and to the downside, and you will be trading it accordingly. So right now I'm trading it to the downside. If it breaks to the upside, triggering my stop loss will probably mean that I was wrong about the market, and then I want to take my chances on the retest to long it. And then I have another zone here, which will be the same story. I will try, we could call it a higher high then if it reaches this zone from this trend. So I will try to long the retest and then play it to the upside. If this zone gets broken, the story is still the same. So that's why Crown tells a lot about the boxes, and I like the zones also, because they are so fucking easy to play. You don't need sophisticated edge here. You're just looking if you are near your area of interest, and you're taking a decision if you want to long or short it. And ranges especially are fantastic places to play, because they're like, you don't need to think where you will take your profit. You have an easy way to manage your risk, and you just play them between two lines basically until it gets broken. Does it answer your question, or you have more doubts? I'm here to help, bro. So if you have more questions, please do ask me.
No, I understand what you're saying. It just, like I said, it's hard to apply it.
Yeah, this is why it's really hard to make money in the market. But if you make your principles really straight and easy to follow, so you will reduce the noise, you can literally make money even without oscillators here. You don't need them. You're just taking chances based on the support and resistance, especially on Forex, which is a giant oscillator. Then you just can't blindly short it here. So what will happen if you are wrong? You will lose 2%, but you are not over trading here. So you are not losing your whole account. You're just taking an opportunity, which is clear to you. It's at the resistance, short it. And if you lose, you'll lose 2%. Then you need to make 50 trades like this to go bankrupt. Okay, and this is made on 4 hour. So you won't have too many opportunities here. But here you have an opportunity to use. So it is hard to get those things like to apply. And I think one of the hardest things is the fear of being wrong and fear that you are not that you are not qualified enough to judge the market. But then it comes the price for your mistakes, which is your position size and your stop loss. So this is the only drawback, I don't know how to call it, in this situation. So you will not go bankrupt by shorting here. Only thing you can lose is 2% of your account. So there is nothing really bad. There are no really bad implications of your decision. This is the same with trading. If you manage to overcome the overtrading and like all those psychological issues, then it comes only to finding a good spots in the chart where you will be interested in playing, making your story, and just testing it and paying for it if you are wrong. But this is the trading. Nobody says that shorting here is the guaranteed profit. I just thought that the more chances are here that it will bounce and go back, then it will break. because it is a resistance and it's supposed to provide a resistance to the price action. And it will become a support when it's broken and confirmed. So it's really clear situation here. If you want to take risk, how you should take this risk to make money. Okay, so try not to be right all the time, Faisal.
I don't think that's the problem.
I think
don't
it is.
mind. Really, why?
Because what makes it hard, in my opinion, this is like what I felt when I was like doing this shit. It is like, first of all, you can't be perfect here because you don't know the future. So this is the first thing. So you will never be able to predict the future. Your job is to analyze the chart and bet on a side which brings more probability, but still 99% chances of winning can lead to a string of losers with 99% chance setup, because it's the distribution of probability. And then that is fear. Why the execution of this idea is so hard? It's not hard. Just fucking short it here and manage your position size and just leave your position like this because it was the plan. And if this plan doesn't work, then you will have time to work on it. But first of all, this is 4-hour time frame. So setups here don't happen too often. So either you take it or not, or just stay flat. But the difference, and this is like how I'm doing why I'm doing the higher time frames when I'm trading lower time frames, because on 15-minute we can have on the 21 EMA a nice bullish setup somewhere here. But then if I look at the 4-hour, I know I'm at the resistance. I should not take long signals. I'd rather play it to the downside. So what do you think is so hard in it, Faisal, for you?
I don't know. I think it's more like reading the market. I don't know, man. Like if I knew, I would fix it. But I think like I don't fear having like losing trade because I don't think of them as losers. Like it's probability and it will just add up to winners if my edge is correct. But how to look at the market and how to analyze the market is probably the thing
Yeah, it takes time to master it, but I try to show you the way, like with horizontals, they're the best to analyze the market. With only PA, remember we were going only with price action and horizontals, and we had a picture like this. I'm sorry, it looks so clouded right now because I made so many drawings, but we had basically this resistance level, this support here, and this lower liquidity zone. It was like the initial one. I rose it a little later. So you can see by just horizontals what is going on with the market. And it is the best way I know to get your bias straight, to just get this analysis done in a proper way. And then what you need to do, you just need to trust them just blindly and see how it goes. If they tend to be broken, that may be too many times. So maybe you're mismanaging your stop loss or your zone is not correct and you need to work on it. But there is like a whole module in the Crowns trading program about horizontals. And honestly, I believe they're the best to get your pivot points, your bias, and your trade. Because you don't need really any oscillators with this picture in front of our eyes here, do you?
No, this looks simple actually.
That's how it should look. So if your picture looks too complicated, reduce the number of zones. Don't get every horizontal support and resistance level on this side. Check the higher time frames and see the reliability of certain zones on those time frames. And this one looks beautiful. It's like really nice setup. And you have two ways here to trade it. Either you can short it, or you can stay flat, which is nothing bad in it, because you don't feel confident about it. But what I suggest, if you have a trading idea and you are not confident about executing it, at least paper trade it and see how it went. Because if it goes here, I will be probably trying to buy the lower of this liquidity zone, somewhere here, and still trade the range until the range is broken, until one of those levels is broken.
Yeah.
And this is just a probability, but this is a thick range, and a lot can happen on the lower time frames. But on the 4-hour, you have a lot of space here to make your money. I need to see Euro USD. Yeah, it looks bouncy. Good. Okay, sounds good.
Yeah. Yeah. Yes. We need to work on it. Or
Yeah.
I need to work on it.
No pain, no gain, brother. It's just.
I know it's just gonna add up, and then, it's gonna start giving out good outcomes, something like that.
Yeah. See, when I was placing my trades, I was thinking too much about the potential outcome of those. If I'm right this time, and it really doesn't matter if I'm right or wrong. I'm just looking at the chart and saying, okay, it's giving me good probabilities in a certain way. Should I take this setup? Well, all the technical analysis knowledge tells me I should. Okay, if I will be right, the market will decide. But I am literally not thinking if I'm right or wrong this time. I just see it at the resistance, it looks good, I'll just short it. If I get wrecked, I won't publish this chart on the Twitter, that's all. I will remove my post with it. You understand what I mean? It's like nothing to be perfect here. It's like no need to be perfect. Oh, this is BTC USD. It's just about taking the probability and seeing how it will work. If you tend to make too many bad choices, just go through all your trades and see what did you do, what were you using. Maybe next time you should not use this. You should not use this edge. Maybe you should use the different one. But then it's time to analyze your skills, and market will verify them really fast.